some more macro. Let's do a little trading. Alan Nuckman is joining us, Chief Strategist at Agora Financial. Alan, last we talked, I was giving you a little bit of a hard time about why your bullhorns weren't as sharp as they used to be. So are you feeling this rally now that it continues to extend? Walk me through your macro take.
Last Monday, I was somewhat subdued, and you picked up on that. The market needed to pause. Last week was exactly what the market needed from a price standpoint and a pattern standpoint. It needed to consolidate. It needed to shake around a little bit. But the way the price action has moved forward, it's very, very positive. And you're seeing the big boost here today. We need some follow through on that, obviously. But we needed that quiet consolidation for the market to find itself. And everything's setting up very positive if you can just look at the charts.
So what on the chart would be really impressive to you? Was it a new intraday high since that 23rd low? Do we need to get above like 2650, I believe it is?
The VIX, we've talked about this. So that VIX had that spike, and if you look at the high to low for the last 52 weeks, it's below that halfway point pivot. That's crucially important. You've seen how the volatility has kind of crept out of the marketplace. We haven't had the violent swings. We haven't had the sharp selling when you saw most people were selling any strength in the market. That's subdued, and that's very much a positive. So I think the VIX is a great indicator. And again, looking at that S&P, I'm more on the 2,800 level as a confirmation of this bottom in place. We can get to that level. That's the halfway point of this drop from the top. And we need to build on the gains from today. But I'm more of a how guy than why. But the why is huge.
Okay.
The why is because we've got buckets and buckets and buckets of money that are going to support this marketplace no matter what happens. And look, just over the weekend, they were talking about a capital gains cut. I don't know what capital gains are left to cut, but they were talking about payroll cut. They're looking at anything and everything. Okay, do not be surprised. I might be the first to say this. Do not be surprised if somehow the Fed starts buying stocks. That's not out of that's not out of any possibilities in this marketplace.
All right, so you basically are saying don't fight the Fed and don't fight what's to come. There might even be more coming down the pike. Alan, before I let you go here real quick, because we're a little over time today, anything that jumps out to you as an obvious trade right now, something that you like?
CISCO is 30% off its lows. It's also 30% off its highs from 2019. So we've had a nice healthy bottom base here. It's traded between 55 and 35. That target's 45 on the upside as a midpoint pivot. The PE is 13. I'm looking at the June call, the June 35 call, down at that low. Is trading around 7 or 8 right now. The break-even's $2 higher. It's got 2.5 months of time. It's a stock substitution strategy. We get to that 45 level 50 easily. This option could double.
Yeah, all right. I like it. Bullish on CISCO, 35 strike calls. You got about 2 months in them. And a break even at $43. Alan, always appreciate the chat here on the trading element. CISCO right now up with a market that is quite a bit up. We've got the Russell up big. CISCO's up 3.5%. NASDAQ is charging forward. Let's take a break though here from today's macro upside move and talk about a group that's under some serious stress. Its future had already been changing too fast for legacy names prior to coronavirus, but now autos are once again in focus because nobody's driving. We got a great analyst coming up who's going to walk through some charts here on the future for legacy autos. Join TD Ameritrade Network for an interactive town hall event on navigating markets in times of uncertainty. Trade ID